Hey traders, Raghi here. In this update, we're going to talk about the aftermath of any kind of major economic event, any kind of catalyst for volatility. This could be non-farm payroll, like we're going to have the first Friday of every month. This could be the impactful FOMC decisions on rates, like we're going to have in May, in June, and July. So think about major events where equities are going to be in play, and this is where our indices come into play. And what you're looking at right now is a 5-minute chart of the NASDAQ. Now consider that the rally that we saw in volatility, you can see there, right up, straight up on the heels of the catalyst, in this case of the FOMC, we were never able to get above the high of that session. Now keep that in mind. One of the things a lot of day traders neglect is the importance of the daily. And this is something that I've taught throughout my day trading career to traders. And I keep this in mind when I trade, which is, Rod, don't lose track of the bigger picture. The bigger picture was we were not able to take out the highs from this very bullish session, which happened on Wednesday. So here we are post-event. And now we're going to dial it into the 5-minute chart because this is what we're looking at while we're day trading. While we're day trading, we're looking at the sentiment that's happening between 9:30 and 11:30 is the bulk of what we want to do. Most of the major moves we're going to see as day traders are going to happen in the first 120 minutes of the day. That's where our major focus is on. And knowing that the previous session's highs, wherever they were up in this area, were rejected, we inherited a bearish market. And when we think about downtrends, we have to think about them as almost steps, right? And there's lots of ways to look at steps. Steps could be the resistance of the wave, right? Steps could be support and resistance based on Darvis, based on propulsion, based on volatility, even based on time. When we start noting that floors, support, are broken time after time, and ceilings, resistance, are holding time after time, that's that stepping down that I'm talking about. And we have to acknowledge that this is not the time to think about bottom picking. This is not the time to think about how is the market going to reverse, right? Although, by the way, if you're wondering how does a market reverse, got to start off with a neutral environment. Then we start thinking about whether or not the ceiling can break. Now, the ceilings in this situation that I'm referring to, we have the wave in play, we have some propulsion in play, and we have volatility in play. How much price movement are we likely to see hour to hour? And as that basically ratchets down and ratchets down and ratchets down, you'll see how effectively it acts as a ceiling. So keep structure in mind always, and then think about the support and resistance. Now let's think a little bit about tomorrow here, since we are talking about the aftermath of a major event on Wednesday that sent the market higher. And then Thursday, this was a dramatic move where all of Wednesday's rally is taken back. What do we do then? This is akin to a 0-0 ball game. It's a tie ball game, as we say. The Bulls had their day, that would have been Wednesday. The Bears have had their day, that's now Thursday. It doesn't matter if it's a Wednesday, Thursday, or a Monday, Tuesday, or a Tuesday, Wednesday. It's just a sequential opposite momentum. Now that it's a 0-0 game, we can go back to this 5-minute chart and ask, if we're going to go neutral, now we know it's a more level playing field for buyers and sellers, for bulls and for bears. Either one can gain traction. We go right back to the resistance of the wave. We go right back to the support and resistance of volatility and the Darvis and start to ask ourselves, all right, could we get momentum as we start moving higher? Could we start getting momentum through resistance, or could we start getting momentum through a floor? So really what's key here is ask yourself, what am I using as a floor and a ceiling? Am I looking at automated levels that are going to help me identify as the market's stair-stepping down? And also potentially stair-stepping back up. Keep in mind, you want to have a neutral environment. As we go into a Friday after a dramatic sell-off, I will tell you this. When we go into a Friday after a dramatic sell-off, how many traders are really going to be interested in taking a long position into the weekend? Right? So keep that in mind. Keep in mind also the day of the week. Right? Volatility does change day of the week. So big up day on Wednesday, big down day on Thursday, here. This could spell a little bit of a pause or more weakness on Friday, because think again, Saturday, Sunday, we'll get non-farm payroll tomorrow at 8:30. All right, last thing I'm going to leave you with. Could that move the market? Could non-farm payroll be a needle mover? And this is going to be every single month. Remember that the Federal Reserve has a dual mandate, not just inflation, but jobs. If non-farm is weak, now what's weak? Worse than expected, worse than consensus, then look for traders to like that, because it suggests that the Federal Reserve might have to tap the brakes on the level, the speed, the pace of rate hikes. If the jobs number is quote unquote good, it's stronger than expected, there are more jobs created, released at 8:30 on Friday than expected, the market is actually, equity markets are not going to like that. Risk appetite is not going to like that, because if the employment conditions are favorable, we're likely to see weakness, because again, we're down the rabbit hole, gang. Good news is not good for equities. Bad news, disappointment from an economic data, macroeconomic data standpoint is good for equities. So that's the final catalyst for this week. Keep an eye on non-farm payroll, 8:30 a.m. And remember that we sell off on Thursday. There may not be this big rebound on Friday because we go right into the weekend. That's the timing. And believe it or not, that's going to make a huge impression on the directional bias that will be day trading through Friday. So keep in mind, this is not about this week. It's about any week where we have this kind of action with these kinds of major macroeconomic pillars, non-farm payroll, FOMC. Hey traders, Raghi from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.